Hello, Mark Sturdy here with another summary of our work this week with 7 days ahead looking at major world markets. And you will see from our summary page that we have just one outstanding high conviction situation, which is basically being short of oil. Well, I'll come to that in due course. First of all, let's have a roundup of the major markets, starting with dollar euro as usual. You'll see that the big dramatic turnaround here has been the weakening of the dollar, pushing us back through resistance at the bottom of this channel and resistance at the bottom of this triangle, which is a major move, and also through the rather less important falling diagonal. That breakout is a major move, a big reversal of what we've been calling a major bull dollar situation with this channel and this triangle pushing the dollar, we thought, down there. So it's a massive reversal of expectations and long, medium and short-term views. The big picture then is a big breakdown of the bull dollar scenario. Quite how much of a bear dollar scenario we have, we can see when we look at the shorter term charts. Here we have the breakout of a trading range and the pushback above these highs here. And that is very important. This area, this boundary of prior highs, which the market has pushed above, is dramatic and now provides enormously good support. So medium term, we think there is good support in beneath the euro and resistance to the dollar, of course, to going stronger. So we think then this support here suggests further weakening of the dollar. In the short term, it's been much more complex. Having had this completion of a head and shoulders, incidentally, both a nested head and shoulders, you might say, shoulder, head, shoulder, or indeed shoulder, head, shoulder, all of which caused the market up and even a bit higher, that is to say a weakening dollar, but it's run into some sideways price action, which renders it rather unpredictable short term. So we're standing back short term, even though we very much like the medium term prospects for weaker dollar, and note the long term breakdown of the bull dollar scenario. The side action to this is best seen in the sterling euro, whereby sterling, like the dollar, weakened with the dollar against the euro and fell back from the edge of this trading range, which has been in since 2016, and it seems to me fell both back from the top, so we've got three tops in line, also this diagonal, which was a parallel channel, so the breakdown we think is significant. This puts into perspective the possibilities for a strengthening euro and with a strengthening dollar, and then we'll come into good resistance there. Here's the resistance, more particularly in the very short-term chart. 117.97 will be good resistance. A little further to go, possibly, but it will run into resistance as if the dollar tries to strengthen a bit more against the weakening, retrace a bit more. So, just as the dollar will run into resistance, so will sterling. S&P 500, a central market. For the moment, given the price action, notwithstanding the big sell-off, all the bull trend remains intact. Only if 4800 if that had broken on the quarter, would it look very bad? And there's no question it didn't. There's the degree of the sell-off. The rally though is running into resistance, 55.59 in the medium term. That needs to be broken if the bulls are to retain their momentum. And you'll see that gathers significance both diagonally and horizontally insofar as they coincide here. So 55.59 is important for the bulls to overcome to sustain the upward momentum. All these markets were bullish before the sell-off and remain bullish for the moment now. Note the quarterly chart. Obviously, now we're running to the end of the quarter, end of June, which is still 2 months away. The market pushed down and then bounced back well above that critical level of 79.93. So that's all intact. Let's look more closely though. Here's just as the S&P is running into resistance, so too is the FTSE, 84.81. The bulls need that to be broken to maintain medium and short-term momentum, bull momentum. And the same is true of the FTSE, of the Euro Stoxx. There was the sell-off, the massive bounce. The bounce, in fact, so much so that it's perhaps 50% of the retracement, but there is resistance here at 52.29. That's not resistance there. This is resistance 52.29 here. Treasury note bonds. We think all these are in trading ranges. There's the obvious long-term situation. Here's the trading range. That is the weekly yield chart. And so we're similarly in the German bonds. Here's the weekly yield chart there. And the UK gilt. That's the daily yield chart. Oil, we think, is our loan. We think oil's in trouble. We think there's a massive multiple top here. The rally back from the lows of 55 back to 65. If the multiple top is to be broken, the bear influence, if that's broken, then we've got to break 64.49, 63.53 and 67. 64.38, I beg your pardon, that's the wrong number. And at the moment, the market is rallied back bravely, having had the big sell-off, and is struggling. It needs to overcome that 64.49 before the bulls can take any confidence from this retracement. Gold, well, we think it's been overbought for a long time. It's gone far beyond the measured moves of this triangle, far beyond the measured move from this continuation head and shoulders. It is drifting back, and we think the bears need the 31.85 to break. First of all, that's the first important support. Then beneath that 29.81, stand back until those break. Thanks very much.